Good morning students. I am going to explain Final Accounts Module 12. I hope that whatever I am posting is useful for the students to prepare for the examination. Those who have done online education, this will be really helpful. Please go through the modules and learn. So 2 points I am going to explain in this, two adjustments. One is provision for discount on debtors and provision for discount on creditors. Provision for discount on debtors is an important adjustment and I will explain step by step. Provision for discount on creditors also, the adjustments you have to remember. Sometimes I have seen that in the examination paper. So what do you mean by discount on debtors? You know that we have to do credit sales to promote our business or to withstand the competition. So what we will do, we will have debtors. So as an incentive, debtors will be always giving some days for payment. Say for example 15 days, 30 days. But if they have to get an incentive if they make an early payment. So discount on debtors is an incentive given to debtors for early payment. Now what will be the adjustment? This discount will be debited to profit and loss account because it's an expense for the firm. Now, always you have to remember sometimes other adjustments also will be there. Provision for discount on debtors. So, if provision for discount on debtors is there, whatever the value of debtors minus the provision for reserve for bad and doubtful debts, then you will get the value of good debtors. So, from that only you can calculate discount on debtors. So, always remember this is an important point. Discount on debtors is calculated on good debtors. Now, the next point I have given the equation. Good debtors is equal to debtors minus bad debts and provision for doubtful debts mentioned in the adjustments. So, this is an important point you have to remember. Now, adjustments. There are different ways of mentioning this adjustment in the question. So, if you are asked to provide discount on debtors in the additional information, you know that if it's coming in the additional information, two adjustments will be there. One will be in the trading and profit and loss account, one will be in the balance sheet. So, it is debited to, if it's coming as an additional information, provision for discount on debtors, then it is debited to profit and loss account, being an expense for the firm. Second is it's subtracted from debtors in the balance sheet. So these are the two adjustments, debited to profit and loss account and it's subtracted from debtors value in the balance sheet. Now another thing is you are asked to provide provision for bad and doubtful debts plus discount on debtors. So two adjustments are there related to debtors. So with both this information is given in the additional information. So you have to remember another thing. First, which one you will adjust? Always remember first provision for debtors is calculated. Because I told you earlier also, discount on debtors is calculated on good debtors. So on good debtors then, after providing provision for debtors mentioned in the additional information, subtract the value from debtors, then you will get good debtors. And on good debtors, calculate discount on debtors. So the first problem, from the following ledger balances, remember that it's not a trial balance, these are ledger balances. Prepare the final accounts of Mr. K as on 31/3/22. Capital 80,000, drawing 6,000, plant and machinery 5,000. That is the addition on 1st August 2021. Opening stock 15,000, printing and stationery 400, rent, rates and taxes 4,600, purchase returns 1,000. This you know that from purchases you have to subtract. Postage and telegrams. This is an expense for the profit and loss account. 800. Rent received 1,600. Insurance charges 700. Salaries and wages 21,300. If it's coming as salaries and wages, I have already mentioned it will come only in the trading account. Purchases 82,000. Sales returns 2,000. This you have to subtract from sales in the credit side of the trading account. Furniture and fixtures 5,000. Sundry debtors 20,600. Carriage outwards 500. Freight and duty 2,000. This is an item for the trading account because this is a direct expenditure. Trade expenses 800. Now sundry creditors 10,000. Cash in hand 6,200. Reserve for bad and doubtful debts 800. Sales 1,20,000. Cash at bank 20,500. Additional information. Closing stock was valued at rupees 14,000. You know that if any item is coming as an additional information, two adjustments will come. So closing stock, it will come in the credit side of the trading account. It will come as an asset in the balance sheet. 600 has gone bad. That means you have to debit to profit and loss account, subtract from debtors. Provide 5% provision for debtors on bad and doubtful debts. So first you will, what you will do, 20,600 is the debtors value given. 20,600 minus 600, 20,000, you will calculate 5% provision for debtors. Then on that, another adjustment, provide 2% provision for discount on debtors. That meaning the previous value 20,000 minus 1,000, that is 5% of 20,000. You will get 19,000. That is your good debtors. On that, you will calculate 2% provision for debtors. So trading and profit and loss account of Mr. K as on 31/3/22, opening stock 15,000, to purchases 82,000, less returns 1,000, outer column 81,000, to freight and duty 2,000, to gross profit carried on, that is the balancing figure 34,000, because credit side is higher, that is the total is 1,32,000. By sales 1,20,000, less returns 2,000, 1,18,000 in the outer column. By closing stock 14,000. So total of the trading account is 1,32,000. You are getting gross profit. So gross profit you will transfer to credit side of profit and loss account. By gross profit brought down 34,000. By rent received 1,600. Now debit side we have more entries. To salaries and wages 21,300. To rent, rates and taxes 4,600. To trade expenses 800. To printing and stationery 400. To insurance 700. To postage and telegrams 800. To carriage outwards 500. To bad debt 600. See this adjustment? Bad debt 600 is the 20,600 is the debtors value. 600 you have debited. Again 20,600 you will subtract from debtors. To provision for bad and doubtful debts. So you have to remember, old provision given in the ledger balance is 800. But new provision, I told you 20,600. First you will subtract 600. Then you will get 20,000. On 20,000 you calculate 5%. Then you are getting 1,000. So the new provision is more. So that meaning you have to debit the difference. 200 you have to debit to profit and loss account. Then on that again provision for discount on debtors you are asked to calculate. So this 19,000 is the good debtors value. Good debtors 19,000 into 2 by 100, 380 you will debit to profit and loss account. Now which side is higher? Credit side is higher. So 35,600 you will balance the account. You will get 5,320. That is the balancing figure that you will transfer to capital account. That meaning you will add to capital. Now balance sheet of Mr. K as on 31/3/22. Capital 80,000, add net profit 5,320, 85,320, less drawing 6,000, outer column 79,320, creditors 10,000. So total of the liability side 89,320. Now plant and machinery 20,000, add addition 5,000. So it's 25,000. Furniture and fixtures 5,000, closing stock 14,000. Debtors 20,600, less bad debts given in the adjustment 600. So you're getting 20,000. First you calculate the provision, that is 1,000. So you're getting 19,000. That is your good debtors. On that you calculate discount on debtors 380. So the outer column is 18,620. Cash in hand 6,200. Cash at bank 20,500. So 89,320. Now the second adjustment I am going to explain in this module is provision for discount on creditors. If we are selling items on credit, similarly when we are purchasing also, we will also be buying on credit. So if we as a business firm, if we are making early payment, we are eligible to get some discount from our creditors. So that is an income for the firm. So this is an incentive for early payment to creditors. So if it's an income, adjustment will be just the opposite. It will be credited to profit and loss account because it's an income. Then it will be subtracted from creditors value in the balance sheet. Now the second problem, from the following account balances, prepare trading and profit and loss account and balance sheet of Mr. L as on 31/3/22. Please remember, it's not a trial balance. These are the account balances. So most of the students I have seen in my 30 years of teaching experience, they will not read that properly. They will think that this will be ledger balance. On that basis, they will start doing that. So each and every word in the question paper is very important. You read that. Here you can see account balances. It's not trial balance. So capital 1,19,400, drawings 10,550, creditors 59,630, bank loan 20,000, cash in hand 3,030, cash at bank 18,970, debtors 62,000, bills receivable 9,500, provision for bad and doubtful debts 2,500. Fixtures and fittings 8,970, plant and machinery 28,800, opening stock 40,970, sales 3,56,430, sales returns 2,780, salaries 11,000, rent and rates 5,620, interest debit, that meaning it should be debited to profit and loss account 5,870, traveling expenses 1,880, repairs and renewals 3,370, bad debts 3,620, insurance 400, commission credit, that meaning it will come to credit side of profit and loss account 5,640. Additional information, closing stock was valued at rupees 1,28,960. Create 5% provision for debtors for bad and doubtful debts. This is direct because provision is not given. Provision for doubt on debtors. So you can calculate on the debtors value. Provide 2% provision for discount on creditors. This is the new adjustment we are explaining. Whatever discount you are calculating from creditors, it will be credited to profit and loss account. It will be subtracted from creditors in the liability side of balance sheet. So trading and profit and loss account of Mr. L for the year ending 31/3/22. To opening stock 89,680. To purchases 2,56,590. To manufacturing wages 40,970. Remember, this is a direct expenditure. Manufacturing wages. It should be debited to trading account. Now credit side, if you see, by sales 3,56,430, less returns 2,780. Outer column 3,53,650. By closing stock 1,28,960. Credit side is higher 4,82,610. So when you take the difference, it is gross profit 95,370. That is the balancing figure. Now profit and loss account of Mr. L for the year ending 31/3/22. By gross profit brought down in the credit side 95,370. By commission received 5,640. You remember in the ledger balance, commission within bracket it's given credit. Discount was given on debit. That meaning it should come to debit side of profit and loss account. If it's given as a ledger balance credit, it should come to credit side of profit and loss account. By commission received 5,640. By provision for discount on creditors. This value we have calculated. This is an income for the firm. So it is 1,193. It's credited to profit and loss account. Now debit side, to salaries 11,000, to rent and rates 5,620, to interest paid 5,870, to traveling expenses 1,880, to repairs and renewals 3,370, to insurance paid 400, to bad debts 3,620. Now bad debts provision, as I have explained in the last problem also, old provision you have to remember 2,500. What is the new provision? So 3,100. There will be always an increase because whatever the existing provision is not sufficient. That is why they are asking you to provide extra provision. So the difference amount that you have to debit to profit and loss account 600. So when you're calculating net profit, you're getting 69,843 because credit side is higher. The total of the profit and loss account is 1,02,203. Now balance sheet of Mr. L as on 31/3/22. Capital 1,19,400. Add net profit 69,843. Then when you add, you will get 1,89,243. Less drawings 10,550. So outer column 1,78,693. Creditors value 59,630 in the outer inner column. Less provision 1,193. So you are getting 58,437. Bank loan 20,000. So total of the liability side 2,57,130. This should be same for the asset side also, to say that the problem, or to see that the problem is correct, the working is correct. Plant and machinery 28,800, fixtures and fittings 8,970, bills receivable 9,500, debtors inner column 62,000 less new provision 3,100. So 58,900. Now closing stock 1,28,960. Cash in hand 3,030. Cash at bank 18,970. Total of the asset side 2,57,130. So this is what I want to explain in this module. So please remember, discount on debtors is always calculated on good debtors. So if you are asked to calculate provision for debtors, bad and doubtful debts, first you have to calculate. Then you have to calculate good debtors. On that, you have to calculate discount on debtors. Similarly, discount on creditors, two adjustments. It is an income for the firm. It will be credited to profit and loss account. It will be subtracted from creditors value in the liability side of the balance sheet. So, happy learning. Thank you for paying attention. And please understand these adjustments are important. So, this is what I want to explain in this module. Thank you.